So we start with the departmental trading and profit and loss account. We'll write the name of the company. CMM company, in the books of CMM company. Departmental trading and profit and loss account for the year ended 31st March 2019. We also have the general profit and loss account for the year ended 31st March. We have the stock reserve that will go there, 31st March 2019. Yeah, that's it. So we'll start with the departmental trading profit and loss account. We have the opening stock, to opening stock. How do I know it's the opening stock? Stock on April 2018. So this year, 31st March 2019, will begin on 1st April 2018. And also they've already given us a stock on 31st March 19. So this is obviously the opening stock. So 12,000 A for department O and K it is nil. Okay, they don't have any opening stock. They didn't start with any opening stock. Then we have the purchases, two purchases, which is 2,76,000 and 24,000, 2,76,000 and 24,000. Then you have the interdepartmental transfer goods from O department. That is, O is sending to K and K is receiving from O. So we have two interdepartmental transfer, and similarly we will have by interdepartmental transfer. Leave one line for sales and write that by interdepartmental transfer. So here it is goods from O department. So O is selling. So for O it is like sales, and for K it is like purchases. Okay. Then we have wages. Two wages, 12,000 and 19,200. Next is salaries, but salaries comes in the profit and loss section. So I won't write it now. You can write it now. You'll have to leave some lines, judge how many lines you'll have to leave and write. Okay, we can actually write it because there's not much more. So I will leave a line for gross profit, a total, and I'll write salaries as well. Salaries are 8,000 and 5,000. 8,000 and 5,000. Then we have stock on 31st March, that's a closing stock, by closing stock, which is 60,000 and 21,600. Then there is sales, this is the first item on the credit side, 2,76,000. 2,76,000 and 1,74,000. Okay, so that's it with the trading account entries. Next, we move to the items in the profit and loss account. Stationery and printing, to stationery and printing. To stationery and printing, 2,560 and 1,960. Then there is plant and machinery. We don't take this plant and machinery here because this is the value of plant and machinery. Why they've given this is to show that only department K is using plant and machinery. So any expenses in connection to plant and machinery will be charged only to K. So this amount won't go anywhere unless we were preparing the balance sheet. Okay, the value of plant and machinery cannot go in these accounts that we are preparing. So we move on now. Salaries, now this has not been allocated, divided, but they have already told us the general unallocated expenses are to be apportioned in the ratio of O3 and K2. Now we have already taken salaries. Okay, now you can either add the salaries in that same proportion here, or you can show a separate item as salaries general. Okay, I will show a separate item. Two salaries in brackets, I'll put general. So this then 18,000 has to be divided in the ratio of 3 is to 2. So if I divide 18,000 in the ratio of 3 is to 2, I will get 18,000 divided by 5 into 3. It's 10,800. Nisha, your audio is on. And into 2, it is 7,200. Okay, so salaries. Then we have miscellaneous expenses, two miscellaneous expenses, which is 3,600 divided by in the ratio of 3 is to 2. 2160, and we have 1440. Okay, who's that? Yeah, Miss Drupa's salary is general, but then they gave us clearly here that the general unallocated expenses are to be apportioned in the ratio of 3 to 2. All these, okay, they've put them in this categories, general unallocated. Miscellaneous expenses also general. We don't know what they are. Okay, but then they've told us in the statement here that all this has to be divided in the ratio of 3 to 2. Okay, so that's why I'm doing it. Miscellaneous expenses. Then we have advertisement. To advertisement. Now, even though I know advertisement is normally divided on basis of sales, but because of the statement, I will take it in the ratio of 3 to 2. So 96 divided in the ratio of, no, it won't come because you're already taking it here. It won't come in the general profit and loss account. Salaries general won't come in the general profit and loss account because you're already taking it here. Okay, now if the statement was not there, okay, say the statement, this general unallocated expenses, the statement was not there, I would have taken salaries in general profit and loss account. I would have taken miscellaneous expenses in general profit and loss account. Advertisement I would have divided based on sales. And bank charges also I would have taken in the general profit and loss account. Is that clear? Okay. So because of that statement, all these remaining are divided in the ratio of 3 to 2. So advertisement, you will get 9,600 divided into in the ratio of 3 to 2, 5760 and 3840. 5760 and 3840. Then we also have bank charges, two bank charges, which is 2,400 divided in the ratio of 3 to 2 will get 1440 and 960. 1440 and 960. Now we also have one more, depreciate plant and machinery by 10%. Now we know that depreciation goes in the profit and loss account, and we also know that the machinery is being used only by department K. So if it's 10%, it will be 14,400 into 10%, which will be 1440 only for department K. So to depreciation only for department K, 1440. Is that clear? Okay, so here we won't have anything. This will be nil. So now we can finish this statement. We'll calculate the net profit before we go to the calculation of the market price and things like that, stock reserve. So the total here is, let's get the total. I don't have the total with me. 1,74,000 plus 21,600, which comes to, this is 1,95,600, and this one, so 1,95,600 here, minus all the debits, 24,000 minus 84,000 and minus 19,200, which comes to 68,400. The gross profit here is 68,400, and the total here is 2 lakh, 4 lakh. Yeah, thank you, Drupa. 4,20,000. This is also 4,20,000, and the gross profit I think is 1,20,000. Just check. Yeah, 1,20,000. So two gross profit carried down. So bring down the gross profit by gross profit brought down 1,20,000 and 68,400. So now we need to find out the net profit department wise. So 1,20,000 and 68,400. So two net profit carried down is, just do the calculation. It is, yeah, 89,280 is one for O, 89,280, and this side it is 68,400 minus 760 minus 72 minus 1,440 minus 3,840 minus 960 minus 1,440. 46,560. 46,560. Okay, so we've got the net profit. We need to bring down this net profit accordingly. By net profit brought down. By net profit brought down. For O, it is 89,280, and for K, it is, for K, it is 46,560. 46,560. Okay, now we need to go, we go to a very important part. That's the only difficulty in this problem. So what they've told us right in the beginning is O department sells goods to K department at normal market prices. Okay, so whatever O transfers to K is transferred at normal market price. Basically, we have goods worth 84,000 that have been transferred by O to K. And then normally in the problems that we have done till now, they tell us in the closing stock of the receiving department, that would be K here, the closing stock of K, goods worth so much have come from O. Okay, goods worth so much have come from O. But here nothing has been told to us. We just know the closing stock. The closing stock of K is 21,600, the total closing stock. Now this closing stock could have been from the purchases, could have been from goods from O, could also could be for many of this. So we don't know how much of this closing stock has actually come from O, because that amount will be at market price. So we need to do a proportional calculation. So first we'll do our usual calculation where we find out the rate of gross profit. We'll do our usual calculation where we find out the rate of gross profit. Okay. So first we are going to find out the rate of gross profit. So we know the formula. Formula is gross profit. Rate of gross profit here, it will be of O, because O is the transferring department. Gross profit upon sales into 100. That will give us the gross profit of O is 1,20,000. Gross profit of O is 1,20,000 upon sales. The sales of O. Okay, now when we take sales, remember that we take the sales plus the interdepartmental transfers. So it's going to be 2,76,000 plus 84,000. We are considering all the goods that have moved out of the department, whether to outsiders or within the organization. So 2,76,000 plus 84,000, which will be 3,60,000. 3,60,000 into 100, and that gives us a percentage of, if you do the calculation, you will get 33.33%. Why percent? Because we are multiplying it by 100. Okay, so this into divided by this into 100, 33.33. Gross profit, we directly know. Sales, when we take sales, it's including interdepartmental transfers. So it's going to be 2,76,000, 84,000 plus 84,000, which gives 3,60,000 into 100. Okay. Now, normally what we would have done, normally we would have seen how much of the stock in the receiving department has come, and we would have multiplied it by 33.33%. But right now we don't know. Right now we don't know, so we need to kind of make a proportional calculation. Okay. So we need to see the total purchases of K. How much of the total purchases of K have come from O, and then we need to check the stock and do a proportionate calculation. So the next thing that we are going to do is proportionate calculation for proportionate stock of department O in stock of department A. Okay, how much of stock of O is in the closing stock of K? Stock of department O, I can put it to be a little more specific, in closing stock of department K. Calculation for proportionate stock of department O in closing stock of department K. Okay, so what we are going to do is we are going to see what are the total purchases of K. What are the total purchases of K? Now, if you look here, the total purchases of K. Basically, K has got goods from 24,000 from outside plus 84,000 from O. Okay, K has got goods of worth 24,000 from outside plus 84,000 of O. So we are going to see 24,000. If you do a simple calculation, 24 plus 84, you will get 1,08,000. How did I get this 1,08,000? Is 24,000 plus 84,000. You'll get 1,08,000. Okay. For 1,08,000, okay, the closing stock, the out of 1,08,000, the amount that has been received from O is 84,000. The amount that has been received from O is 84,000. And we want to know what's a closing stock. We want to know in the closing stock of K, how much is the stock from O. So in the closing stock of K, how much is the stock from O? So we are going to do 21,600 has 21,600 has how much stock from O. So what did I do again? I checked the total. See, what are we are talking? We are talking about the total stock that has come into K. The total stock that has come into K is through purchases from outsiders and through an interdepartmental transfer. That comes to 1,08,000. Okay, so its total goods that have come in is 1,08,000. We know that out of 1,08,000, 84,000 has come in from O. Okay, now in the closing stock, 21,600 is the total closing stock of K. Out of 21,600, how much stock will be the stock from O? Okay, so if you do this calculation, you will get, you'll just have to cross multiply this. You can, it will be 84,000. You'll know this, but I'm just writing it out, into 21,600 divide by 1,08,000. If you do a calculation like this, you will get 16,000. That means out of 21,600, 16,800 is the stock that has come from O, and that is the stock we need to calculate stock reserve. Okay, so how is this problem different from other problems? In the other problem, they had actually told you in the closing stock how much stock has actually come from the sending department. But in this problem, they have not told you that. So we need to do this additional step. We need to compare the purchases, compare the stock that has come, and then check, do a proportion for the closing stock. Okay, so the next thing what we are going to do is now the final thing. Stock reserve is equal to 16,800 into 33.33%, which will give you a figure of 5,600. 16,800, give me a minute, into 33.33. Yeah, you'll get 5,599, which we round up to 5,600. Okay, we round up to 5,600. So this is our stock reserve. So that stock reserve we are going to show in the general profit and loss account to stock reserve. It's also called provision for unrealized profit on closing stock. You can call it that as well, or you can just call it stock reserve, which will be 5,600. Okay. So total this. If I total this, I will get 89,280 plus 46,560, which is 135,840. So my overall net profit will be to net profit. Overall net profit will be 135,840 minus 5,600, which will be 130,240. 130,240.